Bitcoin just locked in its highest weekly close ever, but most people have no idea what's really brewing underneath the surface. Volatility just snapped awake after weeks of silence. Funding's still clean, spot demand is pushing price, not leverage, and right now, as things heat up, whales and institutions are stepping back in, and hard. Strategy just dropped another $765 million into Bitcoin. Japan's Metaplanet, or the equivalent of Strategy, added to their stash as well. ETFs pulled in another $260 million in one single day. And JPMorgan, well, they're now letting clients buy Bitcoin, even while their CEO bashes it on camera. Meanwhile, US debt is spiraling. Yields are climbing, the dollar just lost strength, and Washington's lining up a stablecoin vote that could flip the switch or Wall Street to go down. This is a reset, the kind of moment where smart money moves first and fast, while everyone else waits for the headlines to catch up. If you're here to catch those signals early and stay 2 steps ahead of those next big moves, you're in the right place. Welcome to my channel. My name is Jessica. I'd ask you like the video. It means a lot to me. Hit subscribe if you haven't already, and turn on the notification bell so you don't miss what happens next. So let's get into it. Let's get into it. Fear and greed shines a bright green at 74 today, and you can feel it in every corner of the market. That level isn't crazy euphoria yet, but it's where traders start itching to click buy. You get the sense that everyone's leaning bullish, yet there's no panic rush to chase the top, just a confident pause before the next leg up. Flip over to the volatility charts, and it's almost eerie how flat things look. Bitcoin's swings have calmed to multi-year lows, like a coiled spring waiting to uncoil. When volatility goes silent for this long, history shows that the next move tends to be sharp and sustained. It's as if the market is taking a deep breath before a big leap. Meanwhile, open interest keeps climbing steadily. What that means is more traders are adding new positions now that the price is drifting higher. They're sizing up for a fresh move and giving the market more fuel to drive the rally. Think of it like fuel being put into a rocket ship right before launch. Perpetual funding rates aren't flaring up, so we're not seeing a crowded leverage party. Instead, steady spot buying is pushing the price upward. This kind of healthy demand suggests this isn't a flimsy, leveraged pump, but rather a genuine increase in real money flowing into Bitcoin. Over the weekend, Bitcoin pushed past the psychological barrier at $105,000. That alone is noteworthy, but it may also have marked the highest weekly close in Bitcoin's history. When price sleeps on Friday and wakes up at a fresh record, it tells you buyers are comfortable taking significant risk during lower liquidity hours. Asia's early session then saw a quick burst towards $107,000. That's where they got very interesting. A rapid reversal wiped out around $600 million in leveraged long positions. Liquidations like that happen when the market finally awakens from its slumber, triggering forced sales and testing whether bulls can hold the line. It was a clear wake-up call that the quiet phase we've been tracking is giving way to impulsive moves. Even after that shakeout, Bitcoin still safely at 31,000 above April's lows. Anyone who held through that dip has already banked a 40+% gain. So congratulations if that was you. That kind of return fuels confidence and a hunger for the next breakout, even as short-term traders get squeezed out. And here's the curious part. Retail's search interest has barely budged. Google Trends shows the same muted attention we saw near $70,000 last cycle. And everyday investors remain on the sidelines, leaves the stage clear for institutions and crypto-native whales to dominate supply without sparking headlines or social media frenzies. Options desks picked up on that disconnect as well all weekend. Traders snapped up short call options. Think of them as inexpensive lottery tickets that pay off only if Bitcoin jumps above certain levels soon. That move speaks volumes. Smart money is betting on a move in the coming days while risking only a small upfront premium. In summary, sentiment is heating up without euphoria. Volatility is compressed like a tuned instrument. Real money demand is outpacing leveraged frenzies, and the first tremors of a breakout is shaking out the most crowded trades. We've set the stage for something big. Now let's watch that spring stretch while we hold on for dear life. While volatility finally wakes up, big wallets quietly continue their buying spree. Let's start with Wall Street. Spot ETFs just saw another $260 million in inflows. Just one single day. Imagine ETFs as massive bridges that connect everyday stock investors to the Bitcoin market without them needing to directly buy Bitcoin itself. So when ETFs are pulling in cash at this pace, it means traditional institutions like pension funds and asset managers are still loading up. And it's not just American institutions making waves. Over in Dubai, Al-Abraj, I hope I'm saying it right, publicly listed Middle Eastern giant, just became the region's first major firm to shift part of its treasury into Bitcoin. Keep it simple. Think of a corporate treasury as a company's main savings account. Al-Abraj's move tells us their board sees Bitcoin as a better long-term store of value compared to traditional reserves. Speaking of corporate treasuries, Strategy's CEO, Michael Saylor, he's another big purchase recently, and he just delivered on that promise today or yesterday, depending on where you are in the world. Strategy ended up adding a massive 7,390 BTC, that's around $765 million, at an average price of about $103,500 per Bitcoin. At the same time, Strategy is seeing record highs across revenue, earnings, and in stock price. Saylor's bold Bitcoin strategy is now paying dividends on Wall Street and setting a clear example for other corporations watching closely. And Strategy isn't alone. Japan's Metaplanet also announced adding another 1,004 Bitcoin to their reserves. Moves like this confirm that more corporate treasuries globally are steadily shifting into Bitcoin as part of their long-term wealth preservation strategy. And Wall Street's internal contradiction continues to reveal itself. JPMorgan CEO Jamie Dimon publicly stated again today that he isn't personally a fan of Bitcoin, but almost simultaneously, JPMorgan confirmed it will officially start allowing its clients to buy Bitcoin through the bank. Institutional acceptance marches forward, even when the frontmen, like Jamie Dimon, express skepticism. Finally, adding to this corporate and institutional appetite, high-level investors from family offices to sovereign wealth funds are accumulating Bitcoin quietly behind closed doors. Finance executives are even reporting unprecedented demand from these ultra-high net worth entities and sovereign funds. It's clear the world's wealthiest investors are steadily converting some of their traditional wealth into Bitcoin. Even as Bitcoin catches attention from big money players, macro markets are making their own headlines. Bond markets are feeling the heat again today as well. The 10-year Treasury yield climbed back to 4.5%, while the 30-year yield jumped above 5%. for the first time since 2023. Higher bond yields usually signal investors are demanding more reward for holding government debt, reflecting a sense of nervousness about growing financial stress or inflation concerns. But today, even as bond yields rise, the dollar itself is surprisingly slipping lower, or unsurprisingly, dropping to its weakest levels in 10 days. Usually, a weaker dollar helps boost Bitcoin and other risk assets by making them relatively cheaper for international investors. This dollar weakness adds another layer of complexity right as Bitcoin touches its highest ever weekly close. And at the same time, Washington is gearing up for a critical vote this week on stablecoin regulations. If approved, clearer guidelines for digital currencies could finally encourage traditional financial institutions like banks and major funds to fully embrace crypto. It's an important moment. Better rules around stablecoins mean more comfort for big institutional investors to step into the market with confidence. Meanwhile, Moody's, the influential credit rating agency, just issued another warning about the rapidly growing cost of U.S. government's debt. They say interest payments alone could soon consume up to 1/3 of Americans' total revenue. And new data shows investors are dumping U.S. government bonds at the fastest pace in 2 decades, highlighting increasing fears about the government's ability to manage its swelling debt load. Every new debt scare nudges more investors towards Bitcoin as a potential safe haven. And outside of Bitcoin, money keeps moving into alternative ecosystems. Solana, for instance, is seeing record high inflows and new tokens launching at an incredible pace. Over 325,000 in just 1 week. Just let that number sink in for a second. And Chainlink, a major crypto infrastructure project, which I love, just built a bridge directly into the Solana blockchain. This kind of rapid growth signals that whenever Bitcoin pauses, investors are quickly rotating into promising altcoin plays. Traditional markets are flashing warning signs. The dollar's losing momentum, and policymakers are getting closer to approving crypto-friendly rules. At the same time, fresh capital keeps moving into Bitcoin and the strongest altcoin ecosystems. Okay, guys, that's a wrap for today's video. I hope you gained value and have a sense of where we are in the market right now. I hope that above all, you see that the ultimate playbook, even though I'm not supposed to give financial advice, is simply buy more Bitcoin. Keep stacking sats. That's it. And if you have extra capital, take a look at the top ecosystems as I've presented to you in my last few videos and invest a bit, but never put in more than you can afford to lose. I call it my gambling money, or like literally throwaway money, because you cannot bet on that. You cannot bet on these other tokens. Oh, and before I forget, please follow me on my original X account. My former X account is now no longer available. It's a long story, not worth getting into. The point is, now I'm back at my original X account. Also, just a fun little announcement for you. You're going to want to check the description below. I am featured in a Shark Tank equivalent crypto type show that actually aired on Amazon Prime. I'm entirely taken back, and it's a lot to process, but it's very, very exciting. I think it's an awesome show, if I could say so myself. And yeah, you can find that linked below, and I will also be sharing a few shorts of the behind the scenes experience. It was actually a surprise. I ended up in this show. That's also part of the story that I'll share in my shorts and my upcoming content on X and on Instagram. Yeah, anyway, fun times. I thought I would just share if you guys want to go check it out. Okay, I love you, and I'll catch you in my next video. Ciao.